Bitcoin rallied all the way to 500,000 plus, it would still be slightly less market cap than gold.
Will Bitcoin start to compete with gold? Over the past decade, we have saw Bitcoin gain some ground versus gold. Will this trend continue over the next 10 years? Crypto family, welcome back to the channel. Aaron here, coming back at you with another cryptocurrency video. We have new videos every single day, so consider subscribing. And if you want to check out our Patreon for exclusive content, that is in the description below. In today's video, we'll be checking out Dave Weisberger. He's talking about everything Bitcoin. He believes that Bitcoin will delink from risk assets very soon. And he also thinks that Bitcoin will threaten the ability for the US government to print money. Make sure to stay tuned for everything in today's clip. A lot of useful information. He touches on some great points that you may have not heard of before. So let's go ahead and check out what Dave has to say here.
It doesn't threaten anything right now. In the long run, it will. So if you looked at Alan Greenspan over his years, he always passionately looked to see what the price of gold was, because gold was the original, for thousands of years, the benchmark upon which all currencies were measured. And there are lots of people who will say that gold is actively manipulated down. We could talk about it, but at the end of the day, it still is something that's a benchmark for what people would call monetary inflation. The fact is, unlike gold, which is really hard to measure, which isn't really done in the physical markets, where the derivative markets dwarf it. Like, for example, nobody knows how much gold is in Fort Knox. Nobody knows how much gold is backing central banks. Bitcoin is an open transaction ledger, and it's all public. So it is really easy to know. So if Bitcoin becomes, as Paul Tudor Jones famously said a few years ago, the fastest horse, and becomes the global store of value, all of a sudden we have a real-time, public, transparent scorecard that measures the value of currencies that are backed by nothing, like the dollar. So if Bitcoin grows into that digital gold valuation, then it will make it hard to print money without seeing the consequence of that monetary printing. That's what I mean by that. Right now, Bitcoin is well short of that. It would have to rise by a factor of 20 to be at that level. But there are people who believe that this is a possibility, and I think that motivates a lot of what's going on politically. There are those who want to kill it, quote, in its cradle, in order to stop Bitcoin from growing up and becoming that global store of value, that to be that scorecard, which will make monetary printing harder. Well, because it's gradual. It really is. It's really quite a gradual thing. If Bitcoin rallied all the way to 500,000 plus, it would still be slightly less market cap than gold. Gold has yet to demonstrate any ability to put a brake on monetary printing. So right now, Bitcoin is more of a curiosity for most of the people who are concerned. I think that you will see if it rises too high, yeah, at that point, there will be those who want to squash it. The issue is there critical mass? And the issue is it done in a incremental enough fashion to coexist until eventually it becomes the ability for people to opt out? And like Michael Saylor, I think that incremental likelihood is far more likely to happen. I don't think you're going to get a moonshot Bitcoin going to 500,000 and then the next year going to 5 million in order to replace all global currencies and getting to a Bitcoin standard. I think that it happens from the periphery in. So countries, we've seen El Salvador, very important news this week, El Salvador's bond rating being raised back, basically saying that when the rating agencies cut their bond rating because they adopted Bitcoin as legal tender, that's now been reversed. That's kind of a big deal. If you see more countries on the global periphery, not G7 basically, adopting Bitcoin as legal tender or embracing Bitcoin instead of dollar pegging, I think that you'll start to see that become a bigger trend over the next 5 years. And that's kind of the point. So if you're a policymaker in the US, do you really fear something that is going to happen when you're no longer in the job? And I think that's how they're looking at it. If you look over the last 3 months, it has been more correlated to gold than the NASDAQ, except for today. I think that there's a couple of long-term processes at play here. One is Bitcoin today trades like an option on its own future adoption. So I mentioned, just throw off some numbers. 20 to 25 is the times, 20 to 25 times appreciation is what Bitcoin would have to be to reach what I would call digital gold status, where it starts to approach the market cap of gold that is considered the monetary value of the metal as opposed to the jewelry value of the metal, okay, and the industrial value of the metal. That is a very big move. So effectively, Bitcoin trades like an option on its own future adoption. My favorite chart as to why I'm so incredibly bullish on Bitcoin, you can pull this one up, thanks to our friends at blockchain.com, is the hash rate of the Bitcoin network on the same page as the price of Bitcoin. And you see an enormous divergence over the last 6 months. To me, that's a very big deal. And long-term, that divergence will get fixed. Either Bitcoin's price will start to rally or the hash rate will start to collapse. I believe the rally scenario is much more likely. But the real issue is, as gold over the period of 70 years demonetized silver because it was much easier, particularly post-Federal Reserve, it was much easier to trade in gold as the dollar started getting devalued. And everyone knows that since 1913, the dollar's lost 98% of its value vis-a-vis, just purchasing power. Gold demonetized silver. Gold and silver in the earth are at 15 to 1, basically, a ratio in the earth's crust. And that was a ratio that existed for thousands of years between the value of both metals. In the more modern state, over the last 200 years, that has gone away. And for the most part, gold's increase in value, even today, it's still within a couple percent of its all-time high. Silver is 50% of its all-time high. I think there are many of us that believe that Bitcoin will start to eat into gold's monetary value over time. As I said, it's 1/20th the SOT market cap right now. So you wouldn't even notice it in gold. And therefore, they can move together for a while. But at some point, you might see an inverse relationship there again. But that would be at much higher price levels. But I do think that the store of value narrative for Bitcoin is important. And that's why over the last 3 months, we've seen it react more like gold and less like just a risk asset, even though it trades like an option, and even though 4/5 of Bitcoin volume is in derivatives and not in spot, which tells you a lot about where the marginal buyer can come from on any given day. Mining difficulty increases certainly have an impact on hash rate, but the real thing about hash rate is who feels that a long-term investment in the ability to provide validation for the Bitcoin blockchain and the block rewards that they will get makes sense. And so it's extraordinarily bullish long-term in terms of the network, the overall ability of the network to process new demand. There are other metrics on the blockchain as well in terms of new addresses, transaction uses, the profitability of addresses, the amount of addresses that are long-term holders, indicating there's no real difficulty in supply in terms of investability for new investors, which means new investors will drive the price up. There are lots of metrics that people follow. But the hash rate is probably the single best simple answer for the health of the Bitcoin network. The easy way you can look at this is if you look at the chart over the last 4 years, you'll notice a massive fall when China banned Bitcoin mining, followed by a relentless monotonic trend upwards since that point. So since China banned Bitcoin mining, the strength of the Bitcoin network, its vulnerability to attack vectors has become, well, the vulnerability has gone down, the strength of the network has gone up. And that should be a leading indicator for price in a long-term lens. In a short-term lens, we're looking at a world where risk assets are under pressure because of rate rises. And so it's going to trade a lot like risk assets. Eventually, that delinking, I believe, will happen. I just think it's a bit premature at this point. Right. I believe that between now and the end of the year, that Bitcoin will more and more delink from risk assets. I think that there is, and I do a show every week where I talk with Mike McGlone from Bloomberg. He is extremely bearish on the economy, thinking that the contraction in bank lending is going to be rippled throughout the economy, and that real economy is going to collapse or at least contract. I think that's probably right.
And thank you guys for watching all the way to the end of the video. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great day.